Okay, officially, good morning. Welcome out. Market Watch Group midweek check-in. I am Scott. I will be your host. Here are our disclaimers, as always. Not brokers, not advisors. Don't give advice. Don't give recommendations. We're all here to educate ourselves and use this time for illustrative purposes. Today's agenda, opening market analysis. We'll revisit the posture. Okay, so if we get another volume day today without any more selling, we may see volume go up a tick. Up means less negative, but still, if you missed it, good morning, Lee. Good to see you. If you missed it last night during the working sessions, we basically did a comprehensive market posture process review and a market review at the same time. And it was good, I thought. It allowed us to really dive into the market in good detail and see what we think. So we'll talk about that, how we see our posture. As of yesterday, it looked like it was still likely to ease up, but only like a quarter to a half of a point. And if today is a strong day and we get another strong day, who knows? Maybe not. That's what we're looking for right now in the posture is stability first. We're not just like, oh, it's just going to turn around and make a run. Stability. Stability comes from the first wave of buyers, which is what we're in. The question is, how much does this wave of buyers do? How much does the next wave of sellers do? And then we'll have a better answer. In the meantime, what do we know? Trading's a little less certain. Does that mean we're just going to sit in cash and not do anything? No. It means you're going to do less. It's going to be more balanced. Things like that. Right? It's a little bit more difficult market. So one of the things that I've been wanting to mention is the concept of over trading. We haven't mentioned that for a while. And recognizing in any given market, what is the propensity to over trade? Someone will ask me, and they'll say a lot of times, well, how do I know if I'm over trading? My answer is this. If you don't know for a fact that you're not over trading, you probably are. Yeah? What do I mean by that? It means that if I know I'm not over trading, it's that everything I'm doing is deliberate and under control. If I'm like, oh, I don't know, am I? Then it's like, yeah, well, you should have already known that you're not. So is trading less now than it was a month ago when we were sitting in the sixes or the fives, whatever we were? I can't remember now. Of course it is. Yeah, obviously, right? Obviously. We will review the opportunity list, explore setups, talk about trading plan progress. Before I go on, I'm going to change my slide. I swear, it's like I don't save it. Opportunity list. And let's hit save. Okay, there we go. All right. Okay. Let's start. Let's start here. Yahoo Finance. We know we have green. Glenn just posted. We know we have green here. My computer is running slow today. Market comeback, Disney earnings, Supermicro, three things. U.S. stock futures rise as rebound continues. Why the yen is shaking up the U.S. stock market. U.S. economists push back on recession fears. What else? The NASDAQ is plunging. I mean, there's no news, right? That's what we're looking for. Is there anything happening? Let's go look at the economic calendar. Hi, Michael. Good to see you. Let's see. That's not it. That's next week. This week. Consumer credit. Nah, there's really nothing there. Tomorrow, jobless claims. We got up close to 250 last week. We're projected at 240. I mean, it's higher than 220, obviously. We can do math and understand sizing of things, but are we triggered? Is there something happening? No. I would say no. All right, exit page. I don't know what's going on. Wait. Exit. What is happening today? Okay. Let's look at the Fed watch. When it rains, it pours. I might just want to start over with my... Yeah, crazy. Let's go into the market. VIX. This is the interesting story for me. Is the ridiculous overreaction, first of all, that we can see evidenced here. And I mean, if you look at it now, we're back at 23. We went from 15 to 65 to 23 in 1, 2, 3, 4, 5 days. It's such an overreaction, but and still it's like, well, we're still escalating. Even if this thing comes down to here and turns, that's still a higher low. It's still escalation. We still have to be somewhat concerned. But remember what we're set up for now. When we go back up from here, it's going to be very hard without some huge amount of panic for it to get back up to this high, which means that this, whatever it is likely to be a lower high. And that is excellent for us in bullish trading. It's that simple. So, yeah, as much as we've seen this, and I hope you're you're making notes about it. Before it, during it, after it. Did you panic? Did you break any rules because you got amped up by the excitement that the heavy VIX brings? Did you feel like you talked through it pretty well, stuck to your plan? I would say right now, everything that we've said as it's happened is, we're on point with what to expect. Another day up. Does that mean that this thing is done? No, we know it's a long day. We know that yesterday we gave, let's go look at the VIX or the SPY actually. As we get set up here, we got 1% back on the first day. That was 4% right there. That was a 4% drop. And we got about one of it back on the first day by the end of the day. Then we got another one yesterday, and we got another one today, approximately. And now we're almost back where we were. So do we call this a V? It's hard to call it a V yet. I mean, it's certainly, the shape is interesting. But this is how it looks so far. The problem is if I draw a consolidation line, we're still underneath it. That's not enough, actually. So unless it breaks above this, I'm not going to have like a, oh yeah, we're ready to go. What I am saying though, it's a little pattern that occurs in a time like this that I call a sneaky reversal. A sneaky reversal. So here I have a low. We have the buyers. And the buyers are coming with obviously this first day of volume right here, a big chunk of that was actually the initial gap down. So we had a good discussion yesterday about the fact that even though that's a white candle, it's a selling day. Because when we look at a day is mostly referenced to the previous day's close, which was here. Did that day bounce off of its bottom and close off of the lows? Yes, but did it still drop 3%? Yes, still dropped 3%. It got one back, but it started down 4, right? And so that volume is selling volume. But the next day, we went from here to here. That was buying volume. And if we have another above average volume day today, and it stays, I mean, obviously, it could, if it stays where it is now, and then by the end of the day, it ends up back at yesterday's close, that means we're going to have a red candle and we will have given it back. So we can't be convinced. If you have traded over the last couple of days and started like a new bullish trade on the bounce, I do want to caution you about a standard like, oh, it's a swing trade, so we're thinking maybe 7 to 10 days, right? Where's that 7 to 10 days come from? Comes from that. That's in that vein. This was another trading window here, and there's that, and you have a trading window here and that. Those are 7 to 10 day windows. You can see that they're marked off with the stochastics very similarly, right? That's a swing trade right there. If I took a trade over the last couple of days, am I thinking I'm about to get one of those? Oh, now, of course, we all would like to have a V bottom where it just shoots back up and all of a sudden we're back up here at 450. That's where it needs to get to be a V. Boom, boom, all the way back up. Not right now, it looks more like a bear flag, to be fair. Here's our pull, big pull down. Here's our flag back the other way. It's got to come more than this for me to be like, yeah. I mean, look, the buyers are helping out. They're doing their thing, but they haven't done that much, right? So what's a sneaky reversal? If we haven't broken the consolidation line, I still have to recognize that if it stalls out, let's say we even go up one more day, and then the next day it starts to come back down, that's a selling candle. And then the next day it comes down again, and then all of a sudden, whoop, kind of stalls to the side. Well, I'm thinking to myself, well, should be maybe coming down more. And then if the next day we turn, higher low. Higher low. So it has the same look as this over here. It just never actually broke. That's the difference. Right? This would have never broken the consolidation line. It just sort of did a sneaky reversal. That's why I call it that. Like, oh, look, all of a sudden it just didn't make that. It's still, that would be the right shoulder, left shoulder, head for an inverted head and shoulders. And then when it breaks the neckline. But for me, I want to trade into that. Okay. Let me know if that makes sense or not. Okay, let's see. So, the big discussion right now, obviously, is interest rates. That's. I was like, where's my window? I lost my window. Let's get interest rates going over here. CBOE. I can't mind. FedWatch. There, CME. I thought it was CBOE. CME. It's the mercantile. Okay. So what I want you to notice for probabilities, this is not stay the same and drop. This is drop by 1/4 of a point. This is drop by 1/2 of a point. Okay? So that's the first thing we want to recognize. There is, at this point, a greater chance of a twofer, of a 50 basis point than there is nothing at all. That's for September. So now it's not just are we going to get a cut, but how big of a cut? Okay. I am now in this camp. I think, yeah, they'll hit it with 1/4 of a point. I'd love to hear from everybody else. What are you thinking? What are we seeing here? That's September. Then we go to November. Remember, we have 3 meetings left. From where we are now, this would be down 1/2 a point. This would be down 0.75 from where we are now. And this is down 1 full point. So again, the highest probability, I would put myself here. But the market is even bigger than that. How is that possible? Remember, these are probabilities only. I'm not sure what one has to rise. These are all drops. If you look down at this bottom table, this is where we are now. So you can see there's 0 chance of even being only 1/4 point by the time. The previous chart. I'm not sure what do you so what this is saying is nobody expects it to stay at the current rate. Right? So 36% of the people think the Fed's going to cut by 1/4. 63% think they're going to cut by 1/2. Does that make sense? Now we go to December. And in December, right, same thing. This is down 0.75. So that's the lowest probability is people thinking this is down 1. This is down 1.25. So as of right now, I would say this is what we have priced in, which means the market's expecting at all 3 with cuts and at least one of them at 50 basis points. Yeah, okay. If we get this, the market will like it. The old saying, of course, is don't fight the Fed. It was true in the pandemic. It's true. I mean, it's just as they control monetary policy, that the Fed is much more important than the election. That's what I'll say to the market. Questions, comments, concerns? I would put myself here or even only here. They may hit it, skip it, hit it, and then only get that. But the market's definitely looking for the Fed to get much more hawkish. Dovish, more accommodative. So, yeah, okay. Let's go look through and see how things are shaping up. Opening range, we're now 11 minutes in the opening range. More bullish than not, but we're still in the opening range. Okay, so let's go through the watch list. Let's see what's flowing where, what we think it means. Okay. Making sure I can see my chat. Got it. Let's start at the top with Apple. And yeah, what are we seeing here? Oh, wait, where's my... I believe that my extra moving averages did not take. Sandy had a great idea of a chart walkthrough. Wait, you lost the picks? Oh. Dun, dun, dun. Sorry. I must have clicked something. Should be back up, yes? Okay, good. What had me off was my moving averages. When we break the 50, I like to add and what I'm doing here is I'm just coming over. I've added 2 moving average exponentials into the box. But by default, they come in as 9-day moving averages. I don't want 9. I want 100. So I'm going to click here and type 100. Now, I don't want another green one because if everything's green, then I can't tell what's what. So I'm going to make it red. Then I'm going to come down here to this one that was 9, and I'm going to click on the settings. I'm going to make this the 200-day moving average, not 2,000, 200. And I'm going to make this one blue. And I'm going to say, okay. And now I get that little fan that helps me. This is the same kind of a concept as recently as we've discussed Fibonacci's. Everyone's like, oh, do you do the Fibonacci's? Everybody loves fibs. Can you throw some fibs up there and see what it looks like? I'm not a huge fib guy. I don't believe they're magic. The VIX is magic. That's actual magic. Fibs are just a technical analysis process. It's not an indicator because you have to subjectively put it on. This is objective, right? These are the moving averages. So as I break one, I like to have them just to see what those levels are because those levels are considered important by enough people that they become important, right? Okay. Now we're set up. Now we can go through and review. So what's the problem? We're stuck underneath that 50, right? We haven't gotten back up. Can this do a sneaky reversal? Yes. Has it broken its consolidation? No. I think you're going to find this pattern is similar here. So the sneaky consolidation means that if this thing were to come back and give a higher low without having broken the consolidation, That is something that on a uh, discretionary basis, meaning trader by trader, you could say, yeah, you know what? I'm okay with that. I'm going to trade that. It's easier to get into it when we see the verse smash and grab where the buyers are like, boom, we came in hard, then it pulls back, and then we have that. So that's the more classic reversal. This is the sneaky reversal. So I just want to make sure that we illustrate this because there is a very good chance this is what we see after the next retracement. Amazon. Yeah, look, the market drops and everyone panics. And then when the market recovers, they're like 3 days of recovery. It doesn't, it's recovered. Yes. We've said, yeah, we think that the buyers are going to come in. But is that like, oh man, look how strong the buyers are coming back in? If anything, right now, that to me looks like a dead cat bounce. Dead cat bounce. And if you're a cat person, I'm not the one who made up the saying. What does it mean? It means it dropped all the way down to here. And again, if you're a cat person, don't blame me. This is the saying. But the saying goes, even a dead cat will bounce if you drop it from high enough. That's the height. That's the bounce. But without further evidence that that cat still has some of its 9 lives, we think that at the end of the bounce, the cat is still dead, right? There's no expectation here. Now, if this were to get higher up, then we have like, oh, that's a little more appealing. So, cat wakes up. Yeah, it could be, right? It could be. Sorry. Okay. Let's see. Let me erase this. Let's get back to the watch list. So, this has not broken the consolidation, but it is a candidate for the sneaky reversal pattern. None of them have. Look at these. None of them have gotten back. We're still stuck under the 50. So is this appealing? Yes. Is this enough for us to be like, oh, that's it? We're blue skies again. Nah, there's more work to be done here. You can see this same thing over and over again, right? Now, if we wanted to trade this bullishly, you're trading back down here, and that's one where you wouldn't do a lot of those. The term we say is be careful when you're dumpster diving. Our objective in trading is not trying to call out lows, right? If I was like, hey, come to my catch falling knives class. We like to throw knives with a good spin, and then we reach out and catch them. I'm going to teach you how to do it. Would you come to my class? My catching falling knives class? I don't know. You're like, are we starting with rubber knives? I'm like, of course not. No. They're sharpened on both sides. It's a double-sided blade, and they're very sharp, and no, there's no practice. We just dive in. Trust me, you'll love it. This is not the Catching Falling Knives Club. We're not trying that. If, like I said, if you did something bullishly, Be careful. You're 2 days in basically, and look where we are. Already starting to stall out. Yeah, okay. That hopefully gives you the context that we're in right now. BLDR, oh, that had good earnings. That's nice. Good earnings, responded well. That did break. It didn't get back up here, but on this bullish move, when this pulls back, as long as it pulls back to a higher low, BLDR is back on the menu. Citi, it's not much of a recovery down there. Not much from Caterpillar, but sneaky reversal candidate. I mean, look at CCL. There's hardly any response at all. That's a bear flag. That's not bullish. Colgate still looks very strong. Chipotle. So I saw Sandy said she traded that. That's a nice catch. That. I said I was looking for this one, but it kind of invalidated when it gapped back down into here. But then, boom, it's right back up. So if you got a piece of that, nice. You can see resistance there is second time. It's already slowing down. If you didn't catch this one, what are we thinking? Still have another opportunity just waiting. This is not a market where we should feel rushed to trade. Costco, little bit more. Here's if it goes a little bit more, I'm feeling pretty good about Costco. But again, it's not like I want to catch it now and try to see if I can get the last. No one's interested in this trade, right? What's my risk to get that? I want to risk this to make this. Patience. I've seen a couple of people actually post it where they're like, I'm working on my patience. I love that. That's a skill, patience. So you can see that the industrials, even though they got rattled, they have mostly recovered quite a bit. So I actually am feeling optimistic about industrials even more so than financials. Like, let's do a quick sample. Here is an industrial. Here is an industrial. And here is an industrial. Those all look like they're fighting to hold up. Here is a financial. Here is a financial. I mean, these things have really gotten smashed down. They're in different places when you look at where they are relative to the moving averages. Carvana looks okay still. Fastenal, it's holding up. It's sitting on top. It didn't smash down like a lot of them did. Bitcoin looks like a dead cat bounce. Gold. Okay, so gold did not make a higher high, but it is holding. And I would say that, from here, definitely has some possibility for bullish entry. GM still down. Google still down. Home Depot. It's got earnings, but Home Depot's held up. So consumers actually done okay during all of this. Small caps fighting to get back some ground. They gained it. They held it. They lost it. And you'll notice that they lost it all the way back to the beginning. It's like it was slow, big. Oh, can we do it? No. And now we're right back to trying to figure it out. It looks like. Okay. JP Morgan. It looks all right for the financials, I guess. I will be looking for the same thing, though, on financials. So if JP Morgan does something like this, right, you can kind of see back here. It comes up, it comes down. That's the trade. We don't know exactly. Like, I draw it like this because I want it to fit on the chart. It could take this amount of time, and that's fine. We can be patient for that. We have no expectations of what. Like the blade of grass doesn't have expectations for what the lawnmower does. We don't do that. We just are like kind of speculating what might happen. KBH, Coca-Cola. Ooh, look at Coke. Coke is in a little bit of a pennant, which is kind of like a flag type pattern. There's a lot of buying pressure in Coke right now. So, yeah, I'd like to see if it has another little bit to go. Meta. That was tough. We flagged Meta. It came all the way back to the bottom, and then it popped again. So I would say that's still the same situation, which means that coming out of this, if it has a little bit of a drop and then we hold here, yeah, that's a great trade. I'll take that. If Apple and Meta can regain some strength, that's going to be very helpful for the entire technology group. MMM, I'd like to watch this one a little bit more. Morgan, way down. Not much there for us. Microsoft, way down. It's just barely getting back to the consolidation itself. So, but is it a sneaky reversal candidate? Yes. Can it have a sneaky reversal under the consolidation and then take off? Absolutely. So we have to be ready for that thought process. This is where I say, if you want to be right, have more than one idea of what might happen. If you're coming into trading like it's this or nothing, good luck, my friends. That's a lot. I want to have like 4, like, well, it could do this, and if not this, then that, and if not that, then the other, and if it's not the other, then maybe this one. And I'm ready to move through like a course of actions according to the way it moves. That is the be water mentality. And then I'm like, see, I told you. I knew it was going to do that. I had it all mapped out. They're like, that was your third option. And I'm like, yep, but it was an option. Micron. Do you see anything you like? Because I don't. Right? Some people might be like, oh, Micron's cheap. Okay. Is it done being cheap? Was cheap here. Was it done being cheap there? No. Right? So we don't know if this is cheap yet. We have to make sure that they work it out that, yeah, it's done going cheaper. Now we're ready. Netflix. Oh, that's a little something, but you'll notice that even those 3 big candles, none of them were above average volume. So again, sneaky reversal. It hasn't broken consolidation yet. Nvidia, same. Oceaneering International, OII. Okay. You might think about something like this. I mean, it's hooking. If you were going to speculate, this thing held the 50. It's trying to turn. I think it has potential. It has potential to get to 30 again. I don't need this thing to explode. I could just trade to 30. So there are trades, if you're feeling speculative, that you want to put on. Palantir. Ooh, look how that's a V. If you want to know what a V looks like, it went down and then it went all the way back up. That is a reverse check mark. That's a bear flag. That's a V has to go all the way back up. That's a V. So PLTR, yeah, I like PLTR. To trade today, when I say I like something, some people think that means that no, not to trade today. For this thing to consolidate into my next position where I think, now we're ready to head on back up to 31 or something, right? And that's the trade I'm waiting for right now. So part of looking for patience. Up a little okay, well, yeah, if you put it on recently or if you held on. If you held on, whoo, congratulations on the wild ride that you just QQQ, very similar to a lot of them. SPY, we're bullish today, 1.73%. if it holds like this, then you can start to have an argument that this is indeed, if you draw your line like this, then it's not a sneaky reversal. That's a break of a consolidation. Then you're just saying it doesn't matter. That's the point. It doesn't matter which one you call it. What are we doing here? Well, whatever bullishness you have, you either are in it or you're a spectator. We don't wait till now and be like, oh, now I'm in. I guess you could, but what would we do for that? That's your first Heiken Ashi candle there. So, Heiken Ashi is a great way to look at these. So if I go back to PLTR, Heiken Ashi, put your stop in, ride it up. Let's see what happens. Heiken Ashi is a great way to manage any trade you're in right now. If it's moved fast, you could even think about a 4-hour Heiken Ashi, right? Where I could, if I'm using this to tighten my stop, 4 hours is going to get it tighter sooner than the daily. So, if you are in trades now, the continuation model is one that would make a lot of sense. Here's QQQ. Still in its consolidation. Let me get back to the shorter chart. SPY, TJX, TSM. Okay, TSM. That's a good bullish move right there. That's enough for us to consider the consolidation broken. On the pullback though, right? On the pullback. We're still buy the dip type of people. That's, at least I think we should be. Give me your thoughts. But TSM, I think TSM looks stronger than the others. I think it looks stronger than NVIDIA. The dollar staying down. We like that. That's useful. The VIX is at 22. 22. Yeah, I think that if we, over the next day or two stabilize, and then we have a little dip in the market, which brings a little bit of VIX, and then this turns over. Yeah, I would love that. And this is where if you're not ready for it, you might miss the first bounce. I want to make sure I'm ready for the first bounce. It's going to look like that when it comes. Walmart. Ooh, Walmart's maybe setting up for a bounce here before earnings. We'll think about that. There it is. Remember, this is the last week on our trading plan. Because we have such a strong batch of new people over the last month, we're gonna have a higher emphasis. So those of you who have been around for a while that might be in the prioritization mode for your trading plans, where you've just isolated a couple of sections and that's all you're working on. Awesome. Everybody else, we're going to go together. This week, we're wrapping up improvement strategies, which means we're about to start a 2-month trading plan bonanza. On Sunday, we're going to start back over here in section 1, and we're going to go 1 week at a time, one section at a time. I am going to, and I'm going to talk to Glenn. I'm going to make sure that in our Tuesday, Thursday foundations classes, we are stopping to talk about trading plans. So we're going to talk about it in the working sessions. But what I'm asking from you is 1 hour. Whether it's an hour once a week, it's a half an hour twice a week, or it's 20 minutes 3 times a week. I want an hour specifically dedicated to your trading plan. So if you give me that, then after I say an hour, I'd like at least 2. That'll be better, but an hour, if that's all you got, is fine. And we're going to do 1 week at a time, and when by the time you get through, in 2 months, you're going to have the strongest trading plan you've ever had. And that's just the first pass. That's just defining. Then the second pass, you'll refine it. And then the third pass, you'll polish it. And then after that, you'll move into prioritization, where you're just like, hey, my trading plan is good. I have these 2 sections that I'm trying to clean up a little bit. So after 6 months, you will have defined, then refined, then polished your trading plan. And then after those 6 months, you're just a prioritizer. At any given time, you have one or two sections of your plan that you're focusing on. God, your plan will be amazing. I can't even describe for you what that plan will look like. Right? When was the best time to start that process? 6 months ago, so that you would be in prioritization now. When's the next best time to start that process? Right now. Right now. Let's get on it. Let's do it. So that's going to happen. We're going to make that push. If you're just finishing, we're wrapping up with improvement strategies, setting goals. We have a specific mechanism for how we identify what goals to set and then how to set them. Obviously it's SMART goals, specific, measurable, achievable, yada, yada, yada. All right. It's good to see everybody. Glenn will be here this afternoon for the last hour of the market. Then tomorrow, Glenn will kick us off for the foundations at 8 p.m. I will come on around 8:30 to answer questions and then take over for the second half. That's what we have for the rest of the week. So I would say we're on point. Nothing has happened this week that is surprising to us. Things are volatile, but we're not caught off guard. That's the point. Yeah? Okay. It's great to see everybody. I hope you have a great rest of your day. Let's keep the conversation going in Discord. For anyone who was asking, I updated the link from yesterday. Someone flagged that there was a bad link. That link has been fixed. If you flag it, we'll fix it. It's good to see you guys. As always, happy trading.